We can only control what we have a direct influence on, and that is obviously our operational performance. We're extremely proud and glad about our momentum that we had in 2021. We had accelerating cloud growth every single quarter. Our current cloud backlog, our forward-looking order entry measure in the cloud has surged even higher than that, and that has given us confidence to point to even further accelerated cloud growth in 2022 as we pave our way to achieving our midterm ambitions. We are extremely confident about our momentum, and what then the stock markets make out of this is really in their eyes of the beholder, so to say. I am going to say, though, that I believe that digital transformation capabilities will remain in very high demand, and therefore the software sector as a total, and certainly SAP as a leading player in it, will definitely have a bright future.
Are the easy wins in cloud behind us, though? Because I'm just looking at some of the logic and some of the rationale you've used with the clients to convince them to sign up for the cloud. And this is around business resilience, given all the issues with supply chains. And you've made a purchase today that expands your presence across supply chain financing. So if I can put the question to you, are some of the easy wins gone when it comes to cloud revenue?
No, definitely not. We are just seeing the start of, in particular, our customer base of very large customers making the move. We have launched at the beginning of 2021 our Rise with SAP offering, which is meant to support the migration of our core ERP customers to the cloud. And we have seen a significant surge and uptick in Q4, doubling the Rise numbers from Q3. And what is very particular to note is that in particular, the share of very large deals with our largest customers, let's say a CVS in the US, a Siemens in Germany, a Panasonic or a Standard Chartered Bank in Asia, has only started to kick in now in Q4. We have around about 30,000 ERP customers in our base that are still operating on premise and that we can migrate over the coming years. So we are extremely confident that our momentum will further accelerate, and we have built already a base of multi-year agreements with significant ramps in their contract lifetime, which is already safe money that we have in our backlog for the next coming years. So accelerating cloud growth will be here to stay, not only in 2022, but also beyond.
Luka, I just want to pick up actually on everything you and Karen have been saying, and of course that Thalia deal, which has been announced as well. Are we in a period now where a company like SAP can take advantage of the fact that we've seen a huge decline in the valuations on both the private and public markets of a lot of tech assets as well? We know they've been sky-high prices. We know prices aren't exactly cheap. But is there an opportunity now to ramp up your acquisition strategy?
Yeah, look, we have always taken a look at our acquisition strategy through the lens of how we build a holistic portfolio. Of course, if prices come down in the public and in the private markets, it provides us with opportunities to buy at a reasonable price. But at the end of the day, the strategic fit needs to be right. And when I think about the Thalia acquisition, we're excited about it from various angles. First of all, because they have built a very powerful supply chain financing network with more than 100 very large enterprise customers, 85% of which are also SAP customers, with 2 million of suppliers and $500 billion in annual transaction volumes. But at the same time, they have built already strong integrations with SAP solutions like S/4HANA. So from a technology perspective, it's a very seamless fit. And we obviously and evidently have great go-to-market synergies because we are the clear leader in financial applications. We are the clear leader in supply chain applications, connecting this now with a powerful supply chain financing network in a period of significant supply chain uncertainty. And I should add, the prospect of rising interest rates is just a no-brainer for us to pursue. And from that perspective, while pricing considerations, of course, can never be completely left aside, it's a strategic intent that we are pursuing with the acquisition. And we will certainly see great synergies from this acquisition.